Let me start recording. Shri Guru Bhyo Namaha. Om Shri Ganeshaya Namaha. Today we are going to see SIP and SWP gross figures. For example, invest 5K and realize 36K pension and final fund value of 3.09 crore. I have taken 3 samples and this we can see in detail of the in this video itself. Disclaimer. I am Brahmadesh Narasimha Venkataraman. This video presentation is for information, educational and estimation purposes only and not to recommend buy or sell, invest or redeem your funds. Every investment has its own associated risks. Without knowing the risk, don't invest. I am neither an agent, nor a broker, nor any advisor, simply an analyst with computer background. In the previous videos, we had discussed some SIP schemes and 4 types of SWP schemes, inf14. In this session, we will discuss about some SIP and SWP gross figures, assumptions. Entry age is 40, service period is remaining is 20, step up during SIP is 5%, rate of return is 12%, retirement age is 60 years, and life expectancy is of 85 years. So current age is 40, retirement age is 60, and expectancy age is 85 years. SIP and SWP gross. Say on investing in increasing SIP, that is a step up SIP. Start with 5,000 rupees and in 20 years the SIP would be 12.6 thousand or 12,635. The retirement corpus would be 68.68 lakh, and from this corpus one can take SWP or pension of 35,700 up to 1.45 lakh, and the final fund value of the corpus at the age of 85 is 3.09 crore. At 8,500 rupees SIP, it would be 60.7 thousand pension up to 2.46 lakh pension per month, and final fund value will be 5.25 crore. With 50,000 SIP, the corpus would be 2.06 crore and pension would be 1.07 lakh to 4.34 lakh, and final fund value would be 9.25 crore. This page tells about one detailed fund values and pension values, SWP, SIP, etc. in a long format as well as in a short format. The same SIP SWP can be of one-time investment. Let us say by investing 6,30,000 rupees in one time for 20 years, the retirement corpus would be 68.62 lakhs, and from this 68.62 lakh, one can easily withdraw 35,700 per month to 1.45 lakh per month, and maturity corpus at final fund value at age of 85 would be 3.07 crore. This 3.07 crore can be left to survivor or nominee. With 10 lakh one time, the corpus figure will be 1.08 crore or 1.09 crore, and from this the pension can be from 56,600 up to 2.29 lakh, and final fund value would be 4.91 crore. Similarly, with 56 lakh one time money, the corpus in 20 years can be 6.10 crore, and pension would be 3.17 lakh to 12.84 lakh, and the maturity corpus would be 27.42 crore. Risk and returns of mutual fund in over 12% and bonds. This is where to invest. It is coming from a previous video, and one can invest in small cap fund with a very high risk, and anticipate 20% and over. Example is the CFC small cap fund, direct growth. Let's given somewhere around to 20% in a long 10 years. Mid cap fund direct growth, large cap fund direct growth, flexi cap direct growth, balanced advantage fund, hybrid fund. This is also high risk, but one can anticipate return of 12% to 18%, and HDFC has given a 15.55% balanced advantage fund. Then comes index fund with moderate risk, and gold ETF with low risk. For the this is a recently started one, and Tata Mutual Fund Gold ETF, a fund of funds, has generated 56.05 crore, 56.05% in 1 year. Then comes multi-asset fund, multi-asset allocator fund direct growth. It's a moderate risk, debt funds, low risk, and it can generate only around 9 to 11%. And government funds is also low risk and more guaranteed. It is from 7 to 9%. One can view this and screenshot this page. Links of playlist is given in description box below. Once you practice at least for 3 years in mutual fund schemes, one can learn analyzing company fundamentals and venture into investing into equities in share market. Request viewers to subscribe, like and share to like-minded people. Link available in the description box. Thanks for watching. Let me stop recording. Let me close it. Let me stop recording.